The S&P 500 index rallied quite a bit in today's trading session. We were up at 1.5% as we had a very strong June jobs report coming in hot this morning. Change in non-farm payrolls are up 1.5 million compared to the expected, and the unemployment rate is down to 11.1 versus a 12.5 expected. And so the markets really did like that news, and we rallied as much as 1.5% in the first half of the trading session. Although in the second half we had fallen quite a bit, especially towards the close. Tomorrow is July the 3rd, and the markets are observing Independence Day tomorrow. Since Independence Day falls on a Saturday, tomorrow the markets will be closed, the U.S. equity markets as well as the U.S. commodity markets. I believe global commodity markets should still be open, as well as global exchanges, but for the U.S., the stock markets and the commodity markets should be closed tomorrow. It is essentially the weekend now, and we will have a 3-day weekend. A lot of people were probably selling to take profit before the long weekend, which makes a lot of sense given that we were up quite a bit in this week. We were down quite a bit originally from last week, and we opened the trading session at around the 300 equivalent on the S&P, and we rallied to highs of 316 equivalent on the S&P, which is over 5%. Quite a spectacular rally, and I think it makes a lot of sense that we've fallen about 1% from today's highs. On a broader scale, however, I believe that this might be the start of another reversal downwards. We are now at the level which I previously mentioned in my last few videos, the short-term Fibonacci 618 retracement level, marked by essentially a 313 resistance level. I said that if we closed above this level, chances are we do move higher in the long term. And originally, I did think that's exactly what we were going to be doing in this morning's session. It was at 316, the highest point we traded at on the S&P essentially since early June. I thought it was almost certain that we would close above 313, but as it turns out, we reversed in the second half of the trading session, and we are now essentially at the same point of resistance we tried to break above back in mid-June. And so depending on where we go on Monday, this very well may be the sign that we are going to go lower in the coming days. At the moment, I sold my position. In fact, if I were to be entirely frank, I opened a lot of short positions on certain stocks I believe were overvalued. I do believe that the markets are a bit overbought at this moment, especially seeing that we have a lot more coronavirus cases rising in many states, which I believe the markets are still shrugging off. A slowed economic recovery doesn't affect tech stocks very much, but I believe it should halt any recovery of many coronavirus sensitive, such as Disney, the airlines, and the cruise lines. If we take a look at the Nasdaq today, we have broken to new all-time highs. I think that we are a bit too overextended at this point, and we should see some sort of a pullback. This candle here reminds me a lot about this one here as well as this one here. And so I think that what's most likely going to happen is that we should see some sort of a short-term pullback moving into Monday. A lot of tech stocks I think are now a little bit too overvalued. If you look at companies like Microsoft and Apple, they're $1.5 trillion companies trading at a 30p ratio. And say what you want about both companies, but I think that they're not exactly a growth company at this point, at least not to the point where a 30p ratio is entirely justified. And feel free to disagree if you disagree, but I just don't think buying in at the current valuation is something I'm extremely excited about doing. And so I'm staying away from stocks at the moment. Again, I'm short a few stocks. I'm not shorting Apple or Microsoft. I'm shorting some other companies. I'm looking to short some more industrial stocks, the weaker parts of the economy. But I do believe that the tech stocks are a little bit overvalued as well. If we look at what's moving our stock market higher today, we can sort of see that the tech companies are again moving us a bit higher. Not too much higher, but we do see a lot of large tech companies moving quite a bit higher. Spotify, Twilio, Shopify. I believe Pfizer had some really good news yesterday about their pipeline. They're up quite a bit in the past 2 days. And a few of the banks are even moving higher today. On the weak side of the economy, however, we see that the airlines are down a bit. Walt Disney's down. And some of the cruise lines are down. A few of the tech companies are also down today. Square, Facebook, Fastly are a few of those names. But I believe that they were a little bit overbought in the past few trading sessions. And so this is not a sign of their weakness as much as it is just a profit-taking moment in the stock market. But still, on a broader scheme, I do believe that the tech stocks are overvalued. I'm not using the Fibonacci retracement on the Nasdaq index at the moment since we are at all-time highs. But if you look at the relative strength index, you can kind of see that on the short term, we are at 65 on the daily candle, quite a bit overbought at the moment, in my opinion. And on the 4-hour, I think it becomes a little more obvious where we actually broke towards 70 in the beginning of the trading session before we pulled back just a bit. We're still at around 67 at the moment, and I think that we should see some sort of an extended pullback moving into the future. We are up 6% this week in 4 days. on average 1.5% each day. Quite a spectacular rally in my opinion. Even if you're not going short at this moment, I think that there will be better buying opportunities in the future, and so I would hold off on buying the Nasdaq at the moment. If we do break above this up channel somehow, all bets are off. I don't know where we're going to be going in the future, but I do believe at that point we are going to be in a tech bubble. In the short term, I think we will be moving towards the lower bound of this uptrend, which is categorized by about the 242 level on the QQQ. And I think from there, we might just move higher going into the future if we don't see too many more coronavirus cases. Coronavirus has proven from what the market has said, tech companies are not very much affected by coronavirus, and so the risk of coronavirus doesn't pose an extended threat to the markets. But I do believe even with coronavirus out of the picture, tech companies are by themselves very much overvalued at the moment, and so I am looking to go short, or at the very least wait until we see a better buying opportunity to go in on the markets. Anyways, if you look at S&P 500 volatility, falling again in today's trading session makes a lot of sense as the job reports sent the market quite a bit higher. It's the last day for trading on the TVIX, which is the double leveraged short-term tradable VIX ETN. As of today, this is the last day where you can buy. I believe for the next few days you might have to sell to your broker or something to that effect. I'm not quite an expert on ETF delistings, but this is the last day you can buy the TVIX, I believe. This security had always fascinated me. I've traded it for quite a long time, trading this ETN in the past. I believe I am net green trading this volatility. You know, it's always sad to see an ETN go. I believe that the next best fund to trade would be the ProShares UltraVIX short term. I think this is 1.5x leverage. So UVIXI is going to be less leveraged than TVIX, but if you were a TVIX trader, UVIXI is definitely the fund I would go to if you're not interested in trading VXX futures. The spreads, if you're not interested in trading VIX futures or options on the VXX, which is the non-leveraged volatility fund, spreads on this thing can sometimes get very high, so it makes sense if you want to trade UVIXI instead, especially if you're not looking for extreme exposure in the short term. And so that pretty much concludes my analysis. I believe that in the short term, we are looking to go lower depending on how we open and close on Monday when the markets open up again. I think a lower close would very much confirm the fact that we are going to go lower again. 3,000 is going to be my first target. Below that, I think 293 is going to be the next area of support. I'd like to cover at both those areas, seeing that I am short at the moment. Similar story for Nasdaq. I am looking to go short for the moment, perhaps make about a 4% play if we move towards the lower bound of this channel. And before I conclude, I'd just like to say that gold pretty much closed the New York trading session at around 1776. As of recording, it's now 1775, but a while ago it was 1776. So, you know, it's just very fascinating to see. So with all that being said, I thank you very much for listening to my analysis on the S&P 500 index and the Nasdaq 100 index, and I wish you best of luck in your trading. Take care.